Morning, Steve here in Chicago with the morning grain comments. Well, it's a lovely day in Chicago, so we'll be watching to see the weather over the next couple of weeks. It should determine, especially in corn and beans, what the final yields are going to be. Yesterday we saw a big crop number from one private group, 178 corn yield and a 51.5 bean yield. Market, I don't think, is necessarily trading that high, so we'll see what the USDA says on August 10th and the market reaction. One group feels that the weather is going to be pretty much normal across the Midwest over the next 2 weeks. Another group thinks there'll be kind of a front, stationary front across Kansas into Kentucky and the southern part of the Midwest. North of that will be cool and dry, and south of that will be warm and dry. So it just doesn't really sound like everyone's on the same page as far as the 2-week weather forecast, and it's going to be pretty important. A lot of headlines overnight that is affecting prices. Number one was one of the Chinese ministers said that they would like to sit down and talk with the U.S. about trade issues. That rallied beans off the overnight low. Still, we could see a situation in which on August 10th the USDA raises the bean yield and could show a carryout of 700 million bushels. So it's kind of hard to say that beans are going to rally over $9 on the November with that kind of outlook. Then again, if the market sees that there is no resolution, we're probably $1 overvalued. But if there is, we're $1 undervalued. So it's kind of hard to trade beans until we know what the trade issue is actually going to happen. Over in the corn, there's people that are taking world exports, world stocks of exporters and showing stocks to usage ratio at record low. There was overnight talks about lower European crops, lower Russian crops, the lower Brazil crop we know about. So even though our carryout's coming down. So record low world exporter stocks to usage ratio should eventually move corn prices higher. Overnight there was also more talk about the French crop being down, Australia crop being down, and that wheat prices need to rally $1 from where they are right now. The problem is yesterday's high, we ran into some increased U.S. farmers selling, especially in the hard wheat area. Now they run out of 18 wheat to sell, so they started selling 19 wheat. $6 wheat to the farmer in Kansas is a good price, and I think they've learned not to wait for a home run, to be sellers on rallies, especially if there's a profit, and that probably will encourage increased wheat acres in 2019 down the southern plains. So again, we don't have a lot of wheat in the world as far as major exporters are concerned. Numbers should come down August 10th. Whether they'll come down as much to move the market higher, but I think wheat prices are still underpriced. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.